Hey everyone, thanks for joining today. My name's Chris White. I'm an investment analyst with 5i Research, and today we're going to be going over one of the recent market updates that we sent out to members. The title of this market update is Buy Bonds, Wear Diamonds. The whole premise of this market update is that a potential decline in bond yields should be beneficial for bondholders, and the long-term trend in yields has largely been down over the years. So a simple framework for understanding how bonds work is that as bond yields rise, bond prices decrease, and vice versa. Bond yields move in anticipation or in reaction to changes by the central bank for interest rates. Right now, we feel that bonds have an attractive risk-reward opportunity, and we're going to go through a chart that outlines the percentage change in bonds over the past 15 years against bond yields to kind of give us a backdrop of why that is. One of the most interesting developments of 2022 was the significant drawdown in bond prices. This was in response to interest rates rising and bond yields rising as a result. And so here we can see the annual percentage change in the iShares long-term bond ETF XLB in the orange area graph against the 5-year and 20-year bond yields in black and blue lines. And we can see the inverse correlation over time, but of particular importance is the past 2 years where bonds witnessed a significant drop in price and bond yields rose significantly. Now that we've demonstrated that bond prices move against bond yields or are inversely correlated, the next question that we have to ask ourselves is, where are bond yields going from here, and what would cause them to decrease so that bond prices can go up? Well, we want to focus on this chart here, which is looking at Bank of Canada interest rates against the Canadian 5-year and 20-year yields. From here, we want to note that bond yields actually move in anticipation of changes in the central bank policy rate rather than in response to. So we can see, for example, in 2016, bond yields had bottomed and started moving up well before the Bank of Canada changed its interest rates. And similarly, in 2018, bond yields started dropping right as the central bank paused its interest rate and then subsequently declined. Similar thing happened in 2021 where bond yields started to rise rapidly well in advance of the central bank changing its policy rate. Something interesting to see from this chart is that in 2022, we can see that bond yields have largely traded sideways and the interest rate has actually risen above bond yields. And so this to us is signaling that bond traders believe interest rates have more room to the downside than to the upside, and they're signaling that rates should really be coming down. Okay, so where do we go from here? Well, we now know that bond yields are inversely correlated with bond prices and that bond yields move in advance of changes in interest rates by the Bank of Canada. We also know that the Bank of Canada has recently paused interest rates, and the next move has historically been to decrease interest rates following a pause. Therefore, we expect bond yields to begin drifting lower in the coming year or more, and thus bond prices should begin to increase. So here we have a chart of the long-term bond ETF XLB against bond yields from 2018 to 2020. This was the last time that the Bank of Canada paused interest rates. We can see that the bond ETF gained as much as 20 to 25% over the 2 years while yields sank lower. What we've done is we've overlaid the performance of the bond ETF against the move in yields in the past week or so as the Bank of Canada paused interest rates. And so far, the pattern is similar. We don't expect the overlap to continue forever, but we do believe that the overall trend of declining yields and increasing bond prices will take hold, which should give bond prices a lift in the coming years. Okay, everyone, that's it for today. Please remember to like, subscribe, and share this video if you found it useful, and head to the 5i Research website where members can ask questions regarding individual stocks or the market, find research reports on Canadian companies, receive bi-weekly newsletters on the market, view analytics on their own investment portfolios, and much more. Thanks again for watching, and we hope to see you next time.